Welcome back, ladies and gentlemen, for another YouTube video. All in Crypto here, and today we are going to be delivering another daily cryptocurrency market update. And if you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space and also the broader markets. And that's exactly what we're going to be doing in this video. We're going to be touching on the kind of markets generally, as we did yesterday, and looking at a kind of potential period of risk on as the dollar rests. So far, we've been very validated on how we thought this week would go with the stock market and gold. Bitcoin, unfortunately, is a different story. And it's been a very frustrating year, unfortunately, for myself as an analyzer of the markets, because predominantly all the markets have gone in the right direction, except for, probably including Bitcoin. You know, Bitcoin is still up on the air, except for the altcoins, which is actually a market that I'm more heavily in. They've really largely just gone sideways, and actually we are down on some of our altcoin positions, and we're totally honest and transparent about that. You know, and it's been we could say, frustrating year, but we do still absolutely believe that the crypto spring has arrived, and we're going to be sharing some really interesting things with you in this video. We are going to be looking at JPMorgan's launch of their own tokenization platform. The first trade was settled with BlackRock. What does this mean for some of the layer ones out there? We are going to be talking about that and putting a positive, I guess, slant on this. However, what you have got to understand is a lot of the institutions are likely to use their own blockchains if they can facilitate that, but their competitors may go to the sort of public blockchain market. And then we're going to be tying things in. You know, Cathie Wood's now filed for an updated spot Bitcoin ETF. You are going to get a spot Bitcoin ETF, and I don't think it's too far away, guys. And I think that's going to be a real catalyst. Once Bitcoin starts to pick its feet up and really assert that direction to the upside, and we start that next leg up, which we believe is coming, altcoins will absolutely rocket. And it's very pessimistic in the altcoin market. Yesterday, Bitcoin was actually down more than altcoins. Now, what does that tell you? Well, that tells you that liquidity is really low and interest and involvement in the altcoin market is at a real low. So we've got a lot to get into, guys. If you can do me a favor, like, comment, and subscribe. And as always, guys, please do stay up to date with allincrypto.com. We are killing it in terms of news, bringing you the latest and greatest. Let's get in and look at what we were talking about yesterday. So Friday's close, which was here, this nice sort of hammering shooting star, kind of indicated that maybe the dollar was going to take a bit of a break. And if you look at risk markets, let's drop the S&P on, you can see that they've really been pulling down since the dollar's been gaining this strength. This strength has obviously came from a number of things. One of the most notable things being, of course, inflation, which started to rise in July. Same time the dollar started to spike up, uncertainty, people go straight into the dollar. You can get 5% on it. There is a genuine alternative to the stock market right now, and you've got to factor that into things. Gold, also very similar, but both of these, on the turning of the dollar at the exact same point, have actually seen good weeks. And I do think that this is going to continue. You know, I currently have a long on Tesla. It's around about $300. I also have a small long on GBTC, which I may actually get stopped out on. But Bitcoin, which is very correlated with these, has kind of done the opposite. Although it did show strength when these were showing weakness, and maybe there's a bit of a laggard there. So our expectations were absolutely that Bitcoin was going to have a good week. However, that hasn't been the case. And I think with Bitcoin, you've really just got a lack of interest. And right now, whilst we're in the range that we've been looking at, you've really got to ask the question, what's the reason buyers step in? Even though I'll take the technicals over the fundamentals any day of the week, and short term, we're uncertain on whether, you know, we're going to need that deeper correction, that C wave, that head and shoulders to play out, or we're going to actually take the 30K. I'm unsure, and I have to be totally honest with that. And altcoins get thrown around during that time period, but Bitcoin dominance was actually down yesterday, which is very interesting. And we've actually done a real analysis on others, which I can fly by. I think that's useful information. But generally, risk did well. I mean, even the bond market, which has been aggressively selling off whilst you've got that dollar strength, again, uncertainty, bond market gets hit the most. You know, you can see on this turning that we were looking at, real estate, you know, was even up yesterday. We've got a bunch of real estate ETFs that we watch as kind of a barometer. Let's just pick, I think this is BlackRock's real estate. You can see even this saw a bit of an uptick. However, crypto, not so much. And let's dive into crypto before we cover everything else that we've got to. Let's get rid of these if we can. And then let's move on to Bitcoin. So crypto's really suffering at the moment. It's not a particularly positive sign that you've rejected here off of the 30 weekly moving average. We use the 30 weekly moving average in stage analysis. Right now, we still expect this to be, certainly if we throw the volume on there, a stage one breakout. Stage two breakout. This was your stage one base into a stage two breakout. And we think that this is going to continue to the upside. The question is how does that happen? You know, do we, dropping down the timeframes now, need that deeper correction, which is going to line up with a head and shoulders that's going to give you a target roughly round about here, which is also going to align with, you know, 1, 2, 3, 4, 5, A, B into a C. That is still very much a real possibility. And whilst Bitcoin's in this range, and it's really in the middle of the range, I'm uncertain on which path it wants to take, whether it wants to take this out and we start running in and making those bull flag targets, the inverse head and shoulders target, and slicing through very thin volume from sort of 30K all the way up to 40. I'm unsure on the short term, but I do think it will come eventually, whether we take the longer path or not. And I think with the kind of macro tide now potentially being more supportive of the crypto markets, then there is that opportunity for it to still see some moves to the upside. It's just what is the reason why people will come in and bid it here? I don't really think there is too much of one. And altcoins, of course, are getting manhandled under that sort of precedent. You can see actually it's so right on this week. It's just a shame. And we've been so right on the stock market. We had stocks that reached all-time highs that we were calling out for. It's just a shame that if you look at the altcoin market, you know, this is when we made bearish here, bullish here, out the market here, back in the market here. You know, it's been an interesting ride, and altcoins are sort of back where they were at the start of the year. So frustrating, but you roll with the punches, guys. You deal and adapt. I'll just show you others before we dive into JPMorgan. And what do we want? We want market dominance. This is something that I have been looking at. I think you've got a number of things going on here. I think you've got a head and shoulders target on the smaller time frame. Let's get rid of this sort of falling wedge that we think you could have broken out of. It's going to take you to what's going to be a bigger head and shoulders, and you nestle with head and shoulders to the upside and reversal. So altcoins, I think, are going to make a move, and I think that's going to largely have to be signaled and started by Bitcoin. Let's move on to a little bit of other news that we've got for you. The macro is still very uncertain. I think people get very frustrated in this market, and don't be so hard on yourself, right? You're investing, if you're in the altcoins like we are, in the most volatile market class that there is on the planet, barring maybe some, you could say some commodities at the moment are being a little bit more volatile, but at probably the most uncertain time period in the last 40 years from a macroeconomic point of view. And, you know, we'll see if our overall thesis will play out to be right with laggard rates and things like that. The big news yesterday, of course, was JPMorgan launches tokenization platform. First trade settled with BlackRock. JPMorgan has introduced its blockchain-based tokenization platform known as the Tokenized Collateral Networks, TCM. The application was developed in-house and recently settled its first trade for asset management heavyweight BlackRock. TCN leverages blockchain technology to allow investors to use traditional assets as collateral more efficiently. Everything is going to go this way, guys. We've been saying it for years and laughed at, and now it's becoming a reality. In the inaugural transition period, JPMorgan and BlackRock shares of a money market fund were tokenized. We actually saw, and Hedera have tokenized some of Aberdeen's money market funds through Toko, which is something we've been looking at. You know, we champion a lot of coins like Chainlink, Hedera, you know, Quant Network, and then we champion a lot of sort of public layer ones that we like for the same reason we like Bitcoin. So money market funds were tokenized and transferred to Barclays Bank as security for an over-the-counter derivatives exchange. The platform was initially tested internally at JPMorgan from May 2020. According to Tyrone Labham, head of Onxie Digital Assets at JPMorgan, TCN has the potential to unlock capital and utilize it as collateral in ongoing transactions. The application enables the near instantaneous movement of collateral, contrasting sharply with earlier, slower methods. Moreover, what does this mean for your altcoins? Well, the altcoins that were betting on tokenizing you know, a lot of what institutions hold, it's quite likely that the bigger institutions are going to employ their own blockchains or use their friends' blockchains like JPMorgan and BlackRock to do the tokenization of things. However, there is going to be a crossover into the public world. You know, if we're going to end up in this internet of value, it has to be interoperable, it has to be interchangeable. And that value that they tokenize actually may find its way into the sort of broader crypto space. And you've also got to think about it from a competitive point of view. Lots of banks out there see JPMorgan as a competitor. They're not going to use JPMorgan. They're likely going to use public blockchains, providing they can prove themselves to do the tokenization, to do the transferring, and this sort of stuff. So it doesn't eradicate altcoins. However, it does eat into their potential market share, which I think was always on the table. So this is a very interesting progression or revelation. And we're going to see probably a lot more of this. And actually, if JPMorgan are doing tokenization, you've got to think from a regulatory standpoint, they've kind of already given crypto a bit of a green light if they're allowing them to do this in real time. Just a little thought. Kathy Woods ARK just filed for a updated spot Bitcoin ETF filing after feedback and questioning from the SEC. I think you're going to get this ETF sooner than people realize. Obviously, yesterday, to do a little bit of housekeeping on the macro, you had PPIs, core came out more. The other one came out, normal PPI came out a little bit less. I think CPIs are going to come out slightly lower. And even though the Fed kind of have a reason to continue to hike, we don't believe they will because of the bond market. And actually, you know, Bank of America, I think it's quoted that they have about $100 billion hole. You know, if you look at, despite maybe higher than expected numbers, the CME Fed Watch tool is still predicting a 91% that they don't hike. And we know what happens to the markets in a no hike environment. You know, typically they go on, certainly S&P, and put in new highs, which aligns with our sort of technical analysis that we have for it. So a lot going on for me, guys, unfortunately, and we do apologize for this. In the short term, I'm uncertain whether we need that deeper correction or whether we take it here. It's really still to play for. You're in the middle of this range, and we'll know once we break to either side, and then that's going to set the pace, set the tone, and we'll make a plan accordingly and look on the short term in a little bit more detail. Mid to long term, we still think that basically this is just a correction, and you're going to see, depending on if it goes down here or it could be done here, you're going to see a continuation to the upside. That's all I've got for you guys. I want you all to have a fantastic Thursday, and I'll see you all in the next YouTube video. Thanks all for watching. See you in the next.